everybody. Welcome to the Moving Markets Podcast. Today is Monday, May the 12th, 2025. I'm recording this good 3.5, 4 hours after the close of the market today. Big day on the market. I know most of you that listen to this are already well aware of that. The news, just in case you missed it, was all about the breaking news last night and this morning that the U.S. and China had agreed, at least in principle, if not in writing, to a trade deal. Um, the tariffs that Trump was imposing on China that actually went into effect for at least the next 90 days. That's what that was the announcement from the White House, that for 90 days the tariffs would go all the way from, I think, 120, 130 something percent down to 10%. And the president also indicated that 10% tariffs on pretty much everyone that we trade with are most likely going to stay in place for the foreseeable future. Um, that's we'll see what happens. We'll see if it actually plays out that way or not. I know the news today really skyrocketed the markets. Dow Jones up 1,100 points, Nasdaq up almost 800 points. That's a huge percentage move for the Nasdaq, 4.35% in a single day, and the S&P 3.25%. I mean, these are big moves. And you look at the chart, you look at those highs that we got. Most people still call it a little bit of a Trump bump on the election back in November. I don't have that date on here, but we got that bump that came up from November, and the markets continued up a little bit, stagnant slightly going into the end of the year. Still, the year finished really high. Got another big jump through January and into the first part of February, and then it was a pretty fast, pretty steep drop off. And now, in a period of about 5 weeks, the bulk of that has come back. I mean, we're back down to where this little dip right here. No one got real panicky over that. No one got real concerned about that. Back in the month of November, after that a little bump and that little rally, we got down close to these levels, and no one got too concerned about that. This was a little bit of profit taking. This was a little bit of market adjusting. Here we are back to that level now, and I do think in the next couple of days to maybe a week at the most, I think we'll push back through that. I could see bouncing around there a little bit for 2, 3, 4 trading days. A lot of that's going to depend on where the CPI and the PPI come in. And we'll talk about that in a minute. But I think the markets absolutely have the ability to push through. If you got this sort of flattening right in this area and I've stretched that out over a couple of weeks, but I'm talking about 3, 4, maybe 5 trading days where you're kind of back and forth and sort of flattening around that level right there. That'll bring this RSI back down from where it's almost pushing into overbought territory. This has been a fast run up. I mean, you have 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row that the S&P was up. 2 days that was off, 2 days that it was up, off a little bit on Friday, and back up really big today. I mean, that is a fast, steep rise over a period of just about 2.5 trading weeks. And no wonder the RSI is almost up to overbought territory. Rarely on the S&P 500 does the RSI go into overbought territory. It's even kind of rare for it to get into oversold territory. So that alone tells me, purely from a technical standpoint, that's a pretty solid resistance line right there. I didn't drive that perfectly even, but right where the S&P finished at 58.50, that's a pretty solid line of resistance. And so to bounce around a little bit right there for a few days, I don't think should surprise anyone. A big teller for what's going to happen and whether that will happen or not is going to be the CPI numbers tomorrow morning and the PPI numbers on Thursday morning. Interesting that it doesn't happen often, but once or twice a year, there's a day in between them. And then maybe once a year, sometimes twice a year, the PPI comes out on the same day or the day before the CPI. I don't know why that's the case. I've never looked into why that's the case. But if these CPI numbers come in hot tomorrow, I think it will be tempered a little bit. I really believe that a high higher than expected. So here's what the expectation is: 0.3, year over year staying the same, month over month going up a little bit because last month was, I think, unusually low. I think if all of this came in line or even came in just a tiny bit hot, like if this was, you know, a tenth of a percent higher than what was expected. That would be zero point 0.1, not 0.01. Sorry about that. But if it's a little bit hot, I think that will be tempered because I think what the commentary will be is, yeah, but you're going to hear a lot of yeah, buts tomorrow morning if this number is a little bit hot. The yeah, buts are going to be, this was a reading that was taken before we found out that Trump is putting a 90-day pause on China tariffs, or at least dropping them way, way down for 90 days. The yeah buts will be, we took in a lot more money from the tariffs over the past couple months than was expected, or more than some people expected. And so I'm not overly worried. And that doesn't mean that a hot number here won't drop the markets a little bit. I don't think it'll be a mass ugly sell-off like it would potentially be, if we didn't have that news that broke about China and the US making a lot of progress on a trading deal. If this number is low, let's say this 2.4 number comes in at 2.3 or 2.2. Let's say this 0.3 expected month over month increase. It's the same here for core and the full number. Let's say if instead of 0.3 that came in at 0.2 or 0.1, you're going to see an extension of today's rally, maybe to the tune of the same kind of number, because then all the focus will shift to Jerome Powell and the expectation for this next Fed meeting, which I believe comes up in June. The next Fed meeting on June 18th. Right now, markets are still predicting 90%. The markets are predicting that rates stay the same, and only 10% that it will drop. If we get a low CPI number tomorrow and then a low PPI number, I don't know that this will completely reverse. It's not like it's going to go 90-10 in the opposite direction, but I'll bet you this climbs up. I'll bet it climbs up greater than 50, and this becomes a less than 50 number over here. By how much, I don't know. But you'll see a big change suddenly on a CPI number that is favorable, and an even bigger change on Thursday when the PPI number comes. So it's going to be a fun week. Now, a little bit of housekeeping. I am not going to be online all tomorrow. The most I will do tomorrow is from my cell phone. I will check my own portfolio a couple of times. I'll see what's going on. But I'm on vacation, as you know, and I'm going to be completely out of touch tomorrow as far as watching the market and following what's going on. There's not going to be a podcast tomorrow. I sent out that, and that's part of the reason I sent out today's trade much earlier than I normally would send the trade out. We sent out a double diagonal trade on Walmart in anticipation for their earnings that comes up on Thursday. This was an easy trade to get into. I need to adjust these prices, and I need to put it into the main results sheet here. But I filled almost instantly, and I filled a few pennies better than what I put in as the target rate. We've done good on double diagonals, with the exception of one on Costco that we took a small loss on. At Costco, we had to adjust a few times. It came way back. We did good overall, but double diagonals have generally been good trades for us, and I don't think this one will be any exception. We're paying less money for the trade than what the difference in the strike prices are. That's ideal when you get into a long iron condor. If you can, if you've got a $5 spread on your option prices, which on either side we've got $5 here, if you can be into the trade for less than what that spread is, that's a good thing. Because if after the earnings this thing just skyrocketed up or down, and we had stock put to us early or got called out early, depending on which direction it went, we're okay. We're not going to make as much money as we could if that were not the case, but we're still going to be profitable. And I would not see that as a bad thing. To have opened a trade today, have it close automatically on Friday morning. After that, I think the report comes Thursday morning. I believe it's before the market opens. I'm going to peek real quick to remind myself. I know it's this week. Let's see. Yeah, Thursday before the market opens. I was pretty sure that's what Walmart did. So, on Thursday or on Friday, if we got called away early or if we had stock put to us early, I would see that as a fantastic thing. So, easy trade to adjust, easy trade to profit on. The only thing of note, our AMD trade is doing good. Johnson and Johnson, thank heavens it rebounded a lot today from the deepest point that it was at. If Johnson and Johnson, it started today pretty ugly, and I was regretting rolling this thing out again, but it came way up and finished back in this really, really tight range that it's been in. And I still think before the end of the week, there's no reason for Johnson and Johnson to be having these sell-offs. There's nothing going on that is a logical reason. Today, the reason was Trump's announcement on drug prices, and there's automatically this assumption that, oh, Johnson and Johnson isn't going to be able to gouge us for their drugs. I think what people don't realize on that is that we're going to have drug prices in the U.S. come down a little bit, but other countries' prices are going to go up, such that the net combination of these is probably going to remain the same. I don't think Johnson and Johnson or any other drug manufacturer is going to lose any money. They're for-profit companies. They're not going to, if they're going to lower prices on U.S. drugs, they're going to raise them on other countries, and those other countries are going to have to suck it up and find a way to help the U.S. and the U.S. citizens subsidize the research and development of these drugs. I know I don't begrudge the drug companies for making money. I don't begrudge them for making profit. I don't like that the U.S. has to pick up the bulk of that tab so that other countries can have super low prices because it's just assumed that the U.S. can afford it more than other countries. Let these other countries step up and pony up and pay. And if they can't or they won't, let them get their own drug companies to develop this stuff and make drugs. And you watch and see how quickly these other countries are going to start ponying up and paying more. And they'll complain about it and they'll whine about it. And honestly, I don't care. If we're paying 50 to 100% more than other countries are paying on some drugs, I heard it's 10 times what some other countries are paying for the exact same drug and the exact same dose, same packaging, everything. If that's the case, that just simply has to change. So I think that's why Johnson and Johnson took a hit. I still think it'll come up and get high enough this week that at the very, very worst case scenario, we can get out with a much, much smaller loss. In spite of Johnson and Johnson being down and taking kind of an ugly hit on that one right now, look at how much Nvidia has come up from being, remember, this was down 15-20% just as little as 2 weeks ago, and look at where we're at now with Palantir, back up in phenomenal shape with Palantir. All in all, things are looking great. I sent out a bunch of adjustments to collar trades. We adjusted Ford, we adjusted Nvidia, we did Palantir, we did Uber today. SoFi I'll probably do later in this week, and Snap is the one. Look, I know that puts are worth very, very little. I think Snap is likely to continue up. I think they might break through this resistance. I mean, they came up and hit that a couple of weeks ago, fell back off, meandered a little bit, come up and hit it again. I'm hoping they don't do this number. I'm leaving those puts in place because I think they could. I think they could come back down and sort of test this low mark one more time. So I'm willing to wait one day, a few pennies for the puts that are left on there. Not a big deal if we wait one day. If they don't do anything tomorrow other than drop, if they're flat or if they're up a little bit or a little tiny drop, if it's anything other than a big drop tomorrow, I'll make an adjustment. It'll be really late tomorrow. I might even put it together on Wednesday morning, but I'll make an adjustment for Wednesday morning's open. So if you're in the Snap collar trade with us, don't be too concerned about that. And then SoFi and American, we're clear out in June with our long puts, and SoFi, we've got another week on SoFi. I may add some short puts to this or make an adjustment. It'll be before the end of this week if SoFi continues up. I'm not going to wait until we're in the week of expiration. They're also right at a very strong level of resistance. I think they might go back down and test a little bit lower. That wouldn't change our long put value a lot, but it'll change it a little bit. And so we'll take a peek at that and watch for it. So all in all, we're doing fantastic on the year, almost 100% return on our spread trades for the year. We've got the majority of our collar trades are we're fantastic on Uber, we're profitable on SoFi, profitable on Snap, nicely profitable on Palantir, down a little bit on NVIDIA. That's coming back nicely, up a tiny bit on Ford. We'll call that kind of a break even. Good profit on Bank of America. And we're so close to being back in the green on American. And it's been one of the longer collar trades we've been in, and one that's taken a longer time to get back to a level of profitability. But the last time we were able to add more shares on the back of some really good long put profits, it dropped the average cost per share of all of our stock dramatically. So being back up where we're at now, we're in wonderful shape on this one. So all in all, very good situation here, and looking good on the year. Now, quickly for the triple play members, because I know a lot of our members they follow the triple play trades as well as the collar and the SOS stuff. On our triple play trades, we're looking fantastic on UPS. That was a vast improvement today. Johnson & Johnson, sticking with the same thing that I just told for the spread trade. And then the other one is SMCI. We're still in SMCI. And I was surprised by this move up today until I heard that there might be some, along with this whole China deal. I didn't know this in the original announcement. They might make it easier for chip manufacturers with some of the restrictions and things that have been in place with China. I didn't want to make an adjustment right away. This did not technically cross over on any of our indicators. I think unless there's a really phenomenal CPI number tomorrow that skyrockets this market, I think this is going to drop back down, and it doesn't have to go a long ways to get back below 31. If we get anywhere close to a break even on this one tomorrow, take it and get out. If it's up again tomorrow, I'll send an adjustment for first thing on Wednesday morning. Last note on the triple play stuff. I intentionally did not do any trades today for tomorrow morning's open, because as I was getting ready to put some stuff together this evening, I remembered that we had that CPI report coming out tomorrow morning. You're going to have to wait until Wednesday morning to get some new trades for this week. I'm still planning on sending 2 or 3 new trades, but you're going to have to wait until Wednesday morning for them. We've got several trades that are still open, so let's just kind of keep managing those and get those back to some break even or profitability so that we stay at a really high year-to-date profit on our triple play stuff. All right, I'm going to wrap up right there. Once again, for everybody, I will not be online at all tomorrow. I won't be recording a podcast. I'm going to be leaving early in the morning. I'm going to be back very late tomorrow night. Any adjustments that I do for Wednesday morning will probably be done early Wednesday morning prior to the open of the market. So make sure you take a minute and check your emails first thing on Wednesday morning before the market opens for any adjustments or any new trades we might send out. All right. Thanks, everyone. Bye-bye.